As global inflation figures remain elevated and central banks signal a hawkish stance, the correlation between Bitcoin and traditional risk assets is under intense scrutiny. This is market analysis, not financial advice. Higher interest rates typically dampen demand for speculative assets like cryptocurrencies, as investors shift towards safer, yield-generating instruments. We've seen Bitcoin's price action closely track major equity indices. However, the narrative around Bitcoin as a potential inflation hedge continues to be debated. Proponents argue that its fixed supply makes it a superior store of value compared to fiat currencies susceptible to devaluation. Recent price action, however, shows a slight dip for Bitcoin, down 1.7% to $61,400, and Ethereum also saw a modest decline of 0.8% to $1,600. This suggests that the macro headwinds are currently outweighing the inflation hedge narrative for many traders. Looking at the broader crypto market, Rain, a lesser-known altcoin, managed to post a gain of 1.5%, reaching a market cap of $10 billion. This could indicate a rotation into smaller cap assets if larger ones continue to struggle. The Federal Reserve's stance on interest rates is a critical factor. Any indication of a pause or pivot in monetary policy could significantly boost risk assets, including Bitcoin. Conversely, persistent inflation data leading to further rate hikes would likely exert downward pressure on Bitcoin and the crypto market. The market is also watching the European Central Bank and the Bank of England for their respective monetary policy decisions, which can have ripple effects globally. Understanding these macroeconomic dynamics is key for long-term investors. The interplay between inflation, interest rates, and Bitcoin's performance is complex and constantly evolving. We are seeing Bitcoin trade more like a tech stock than a digital gold in this environment. This means that news regarding Fed policy or inflation reports will likely have a more immediate impact than supply-side arguments. The total crypto market cap currently stands at approximately $1.21 trillion, reflecting the cautious sentiment in the market. For investors, staying informed about these macro trends is crucial. The next few months will be telling as central banks navigate the delicate balance between controlling inflation and avoiding a recession. Follow at Candle Inside of C for daily market data decoded. This is market analysis, not financial advice.